What's good, guys? It's KYV, and today it's gonna be a short video on macro times. It's a very important and kind of beginner friendly thing when it comes to time, because there's a lot of key things that have to do with time and trading. And honestly, the simplest thing I can think of is this and Silver Bullet, which we will talk about in another video. But macro times, whole new concept. I don't know if maybe you guys haven't heard of them, but it's just a useful thing to look out for in your trading. And honestly, I know some people who just base their entire trading periods on macro times. So let's just dive into it. We'll dive into it, explain what it is, show some chart examples, and just wrap up the video after that. So what are macro times? Macro times are the most optimal time for price to run a draw on liquidity. So macro times, they occur during the last 10 minutes of an hour and then the first 10 minutes of an hour. So here I have every single New York macro. Again, it's all in Eastern Standard Time, but we have 6:50 to 7:10 a.m., 7:50 to 8:10 a.m., 8:50 to 9:10 a.m., 9:50, 10:10, 10:50, 11. You guys get it. Now there's a few that I do want to highlight, and that is actually this one right here, our 9:50 to 10:10 macro. This macro right here may be the most important one. Whoops. This one may be the most important one and the only one you want to focus on. And why is that? That's because it aligns with probably the most key time in the day, which is, oh, that is the wrong one. I meant to circle this. Aligns with the most key time of the day, which is literally beginning of Silver Bullet, after New York market open, and in between our key times of the day, 9:50 to 10:10. So what can we expect during macro times? Well, obviously we can expect our biggest moves, and it should just hit the fastest if we were to enter here, like our take profit or even stop loss. You just get in and out, and you have multiple shots in the day to just land one macro. So with that being said, let's just go straight into some examples. So we're gonna, obviously in this video, we're just gonna highlight the 9:50, 10:10, maybe 10:50 to 11 macro, but let's just do it. So, all right, so right here is a pretty wonderful example. So 9:50 obviously opens up right here. Prior to that market open, we did manipulate into a higher time frame PD array, so do anticipate some bearish price action. So now here there isn't really any entries given for any bearish like shorts. There's this 1 minute gap, but did get a closure. So ideally we want to wait for some type of entry. So let's play it forward. So right here, I can already see we had this FVG. So if you really wanted to have taken this, you could have possibly done something like this and then taken like a 2-hour trade. And then we're going to see how fast that happens. Obviously, macros, you can't just gamble. You need some type of bias. So you can't just take one direction and hope for it to win. You need some type of bias. So we're going to literally just mark out the window of the macro and see if it hit. As you can see, what time did it hit? Literally 1 minute after the macro ended. So right there, that's the first example of macro playing out. We're actually going to do the 10:50 to 11:10 macro. So let's fast forward. So right there, 10:50. Again, let's check the higher time frame, see if maybe we swept in key levels. So okay, right here we did sweep some key levels. Swept this low right here. So let's go back onto the 1 minute. And just one more thing I want to say. To enter during a macro time, the entry can form before it. You do not need to enter in a macro time. So there's also this fair value gap. And maybe we can look to take a trade there. So we're going to look for some longs. Again, 11:10, 10:50 to 11:10 a.m. So let's see how this ended up playing out. Keep in mind that this is sort of a bad stop. A true protected stop would be at this low. That being said, let's just see how this ends up playing out. Again, edged, literally edged right there. We are accumulating. So let's just see how this does end up playing out. I don't know for this example, to be honest. So right here, 11:10 is the end of our macro. So we did not hit full TP within that macro. Sometimes it's just going to happen. It's not going to play out. But let's see if this would have ended up hitting. Sometimes you can let the trade run past the macro. Obviously, it's not ideal, but you can let it run past the macro. So let's see if, yeah, this would not have hit. So it probably would have been break even at this point. So we'll just close this. And that's just an example of macro not working. So again, it doesn't work all the time. It is just a good time frame to trade within. If you did enter here, you would have probably been offered a better trade because this entry was provided right before the macro. All right, so here, this is the day right before the last example I showed. So let's just analyze this. So 9:50, we're going into that. We did inverse first present. I traded this day, pretty sure. Yeah, I did trade this day. Right here we had that, and then we had this FEG formed. And then right here, we are approaching macro times. So right here could have been an entry. This fair value gap could have been a nice entry, or even this fair value gap entry down here. Let's just say hypothetically we did not enter there, and maybe we entered right here instead. At the beginning of that macro, we'll have our stop right there. We'll just go for a 1-to-1 and let's see how this plays out. So again, we're out of the macro. Ideally, you would want to close this trade. If we're not like within the macro time and we hit our TP, then probability of it does go down a little bit. So right here, ideally you'd want to close. Let's see if this full TP would have ended up hitting. It's very interesting. Okay, so it would have, but again, as you can see, we dragged on into literally the next macro, which is what we're gonna check next. Have a sweep of minor buy side right here. And let's check the higher time frame. Of course, that's where we want to be. We have this 15-minute gap, probably some type of higher time frame PD ray as well. Okay, not a 1 hour, very interesting. We'll stick with this 15-minute gap right here. So let's see, we do hit the consequent encroachment of that gap, literally maybe like a point off. So let's scale down. 1050 started right here. So maybe we can anticipate shorts. So let's just see maybe this fair value gap get inversed, and then maybe we could short off that. So we're gonna still wait. Right there's our closure. So let's enter shorts. We can enter off of this, maybe retracement into this IFVG, and we'll target down here. So again, let's set our sell limit. So again, does not end up playing out during the macro time. So therefore, we would want to maybe look to close or go break even. We'll go break even for this example, but let's see if that did end up hitting. So that would have been a break even. Again, ideally, we want to see that trade hit before macro times. But as you can see, none of this is being cherry picked. So that is going to be the last example and the end of this lesson. So just a quick review, macro times, the last 10 minutes of an hour and the first start of every hour. And it is the best time to enter in a trade. So we can expect to run a draw on liquidity or possibly just make big displacement during that time period. So that's about it. If you guys found this video helpful, make sure to subscribe for more lessons and join the server in the bio if you guys have any questions you want to ask. We do these lectures every single day for free, so no worries about anything being behind a paywall. But yeah, that's it, and we will see you guys in the next video.